Also, people like to act like gold is like doesn't go down or doesn't have these volatile times. It has massive drawdowns. Like if you look at 2011 to 2016, it also has drawdowns. Everything has risk.
The typical path line that these things follow is to announce and then buy, as far as I'm aware, right? So $1 billion is essentially, we're going to get $1 billion of buying pressure on ETH. Is that the right way to read these things?
Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
James Seyffart. The last time I saw James, we were drinking some margaritas in Austin, right next to the Joe Rogan Comedy Club. James, it's good to see you again, man.
Good to see you, dude. Wonderful to, I guess, see you again. What a throwback. I forgot about that until you just said it. I was like, yeah, that's exactly where it was.
I think that was consensus in Austin. Yeah.
Yep. 24? Yeah,
I think so.
2024.
A lot's changed since then.
Yes, for sure.
Man, our team behind the scenes set us up with quite the headline: Downtober and ETFs update. James, is it Downtober or Uptober? Can you please give us some insights?
Yeah, I mean, if you just look at the prices, it's definitely Downtober. I mean, this is worse than September as far as I'm concerned.
Crazy.
Or I guess it's, what is it, Downtober and October? I mean, it's just down. I guess that's the way the crypto markets work, right? Like, if everyone thinks it's going to go one direction, it's probably going to go in the opposite direction, at least for the near term.
Counter trading CT has a 100% hit rate, essentially. Man, I think, what a lot of people are interested to hear about is, the ETF update. I wish there was a more, concerted effort that we could push forth while the government was shut down. But generally, people were expecting October in part because of all these ETFs that were set to go live, and they've just gotten pushed back. What are we seeing here is, generally when you're looking at the ETF landscape, how are you keeping track of these things? Is it just simply a waiting game for the government to reopen, or is there other things that we can look at to give us, some information about where things are going?
Yeah, good question. I mean, we have, like, I'm working on this numbers now and I'm looking at some stuff. I probably missed some filings, but there's over 150 filings for digital assets. Some of those are like defined outcome ETFs for Bitcoin. Some of them are like covered call strategies on crypto assets. A lot of them are, there's like 35 different assets that have been filed for. So, I mean, some of them are leveraged, some of them are inverse, like there's, you name it, the issuers are filing to launch these things. But as you mentioned, the government's in a shutdown. So I don't think anything new is going to come to market while the government is shut down. That's my current expectations. I guess anything could happen because technically the rules are, if the SEC doesn't stop you within 75 days, we can get into the weeds there if we really want. But basically the new rules are basically, if the SEC signs off on things or doesn't stop you, you can launch the product within 75 days of filing. Realistically, there's only 9-ish assets they're going to get approved before the end of 2025 that meet these new generic listing standards for like traditional spot products. But there's other ways to get around and launch, like, these pseudo products that are almost like spot or are leverage or use derivatives and things like that to provide exposure in ETF wrapper. But as you said, I don't think any of those things are likely going to launch while the government is shut down.
Yeah. Do you think that these ETFs, which historically have had a significant impact on the crypto markets and have seen incredible inflows, do you think with the recent uprising of digital asset treasury companies in this publicly listed format, because now those are sort of in the spotlight and you can get exposure through these DATs, do you think we're going to see a little bit less anticipation and excitement around the ETFs when they do inevitably go live?
Yeah, I mean, so I have a few thoughts here, right? Like the long tail of assets, I mentioned there's 30 plus assets that are filed for ETFs. Some have like 20 plus filings related to them, like Solana and XRP and other Bitcoin and Ethereum products. I think the longer tail of assets are of assets like specific digital currencies. They're probably not going to get a ton of interest, right? Like just because you launch like the 47th largest digital asset in an ETF wrapper doesn't mean that this asset's going to take off because it simply has an ETF. I mean, if you look at the Bitcoin ETFs, part of the reason they did so well is because there was so much pent up demand. And when they launched, Bitcoin was roaring, right? Like it launched into early January and everyone was expecting it. A lot of money poured in. Initially, it was actually kind of a sell the news event. But long term, money kept pouring in and it was a positive thing for the space. Ethereum is the opposite. For the first 5 months of its launch, they had net outflows for Ethereum ETFs because, market had dumped. It was in the summer. There wasn't a lot of demand. It came too quickly after the Bitcoin ETF launched. The narratives weren't clear. But then Trump got elected and it took off. And it's just another avenue for people to play the space, particularly TradFi types of people. So I think the same thing could happen for these other assets. So I think things like Solana and XRP, we know there's pent up demand there. Is the pent up demand as much as there was for Bitcoin and Ethereum? Absolutely not. There just isn't. Bitcoin is in a league of its own, and Ethereum also has done exceptionally well in recent months. So the one area that I am extremely bullish on for some of these longer tail assets, other than Bitcoin and ETH, and maybe even other than Solana and XRP, are basket products. So like index ETFs that are going to provide you exposure to 10 plus different crypto assets. I think there's going to be a lot of demand from the TradFi world, from advisors and brokers that are trying to put clients and give them, simple beta type exposure to the underlying market. So I think a lot of demand will flow into these other assets via those basket products over the long term. But near term, yeah, it's more the underlying market that's going to determine how well these do than necessarily the fact that all of a sudden there's an ETF. It's not like that's not how this works. I think it's more going to have to be people will jump into the ETFs because something else is going on with the underlying assets.
What are some of the digital assets that you're seeing become included in some of the top 5, top 10 indices? Is it just purely by market cap and then they'll rebalance if a new coin enters that market cap? Or are they cherry picking some from the top 10, 15, 25? I think I saw Hyperliquid included in maybe one of those baskets. Is there any, aside from the normal ones, the Bitcoin, ETH, Solana, you mentioned Cardano, XRP, there's some pent up demand there. What other assets are you seeing might enter that, have a seat at the table, if you will, in these indices?
Yeah, I mean, so there's a bunch of indices for like top 20, top 50 types of things. Some of them are like, top 20 X Bitcoin, X ETH, top 20 X Bitcoin. So like there's all these different variations. I think the ones that do just a broad market exposure, they're going to give you Bitcoin, ETH, and like maybe the 8 next largest or 18 next largest, what have you. I think those are going to do really well. But I also think ones that I kind of hinted at already, where like people already have their Bitcoin exposure, maybe they already have the Bitcoin and ETH exposure, and they really they don't know what to do around the like when you go deeper into the rabbit hole. You're going to see a lot of demand for those types of products too. But I mean, the products that are out there right now is the Grayscale Digital Large Cap product. Hashdex has a product. CoinShares actually has a product that holds other ETFs from other countries, other regions to get the exposure. But like they go from XRP, Solana, Avalanche, Cardano, Chainlink, Polkadot, Litecoin, Sui, Stellar, Uniswap, Ton, Near, SEI, Cosmos, Aptos. So like those are all names that are in there. And I think that number is, as we get further and further into the future, they're going to get longer and longer tail assets in there. But again, it also, like I said, it kind of depends how the underlying market goes. If we are going into a bear market here and we are topping the 4-year cycle, like everyone kind of has been predicted and most people are expecting, I'm not necessarily in that camp, but like these things are going to launch and they're probably not going to get a lot of demand initially.
Just curious how you are thinking about that. Are you seeing the 4-year cycle? Are you seeing it play out and you're expecting this? You said you're not necessarily in the camp. What camp do you find yourself in these days?
I don't know. I'm not even allowed to like really have price prediction camps, but I guess my overall view here is like, if we are still in a 4-year cycle, I think the amplitude and, absolute levels of like price appreciation, depreciation, collapse and rises, I think it's going to be lower. Like the amplitude is kind of like going down, even if we are in some level of a 4-year cycle, which I kind of feel like I don't necessarily believe that, particularly for things like Bitcoin and ETH that now have like more institutional capital, more advisors playing along. Like when you think about an advisor, if you have somebody that's managing your money and you're putting an allocation into a Bitcoin ETF or a crypto index ETF, like the way you usually do that is like you target like a certain percentage of your portfolio. So like if it does really well, you're going to sell that asset. Right? Like if you have a 5% target allocation to Bitcoin and it goes to 10% because it went from 50 to 100 or 670 to 125, whatever, you're probably going to sell when you rebalance quarterly, semi-annually, annually, or maybe even you just hit limits and you're going to sell down. The same is also true in the reverse, right? Like if you have a 5% allocation and Bitcoin goes from 125 down to 75, you're probably going to be buying more when it gets down to that 75 level for rebalancing purposes. So I think these sort of like more longer term allocated type investors coming in through the ETF wrapper and just institutions in general are going to kind of potentially dampen the long term vol and the range of prices. So I think I think we're going to see a 50% drawdown? Possibly, for sure. Do I think we're going to see an 80+% drawdown? I don't know. That would honestly surprise me unless like we have some calamitous, like actual like great financial crisis, COVID type situation that happens. So yeah, I think the cycles are probably not going to be, my base case is the cycles aren't going to be what they have been in the past, but people were saying that last time. I wasn't in that camp last time, but now I'm kind of joining that camp, I think, this time.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay. The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network. Hibachi. Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire.
I think so too. I mean, the dampening that you're describing, it's almost like we're going to have these atmospheric pressures on either side, both up and down, as these funds are rebalancing. So that makes a lot of sense, as you mentioned, dampening the volatility as we extend further out. One of the things, and I know you're more on the ETF side, but these DATs are kind of taking the world by storm. One of the things that just came out a few hours ago is this founder of Huobi, Li Lin, announcing a $1 billion Ether trust, effectively a digital asset treasury company for ETH. I was of the understanding, Tom Lee and SBED and kind of these guys were almost out of powder. It was like most of the Ether buying was behind them, but it seems like we're just getting new entrants with fresh cash coming into the space. And then just, again, is the typical path line that these things follow is to announce and then buy, as far as I'm aware, right? So $1 billion is essentially, we're going to get $1 billion of buying pressure on ETH. Is that the right way to read these things?
I won't pretend to be an expert on all the DAT stuff. Obviously, I have my own opinions, but that seems to be what they call the shot and then they go do it. At least that's what Saylor and specifically the Tom Lee have been doing. The DATCOs thing is interesting because some people, I will admit, I was one of the people that thought that the strategy premium to MNAV was going to take a hit when the Bitcoin ETFs launched. And really that isn't what happened at all. Like if anything, it was like a flywheel building on each other. And kind of the same thing happened with the Ethereum DATs that came out this summer and Ethereum ETFs. Like they had almost all of the flows that have come into Ethereum ETFs have come in the last 6 months, like the vast majority of it, alongside the DATCOs launching and buying ETH itself. So, yeah, it's interesting to see how this happens, but like obviously if the flywheel was spinning in one direction positively, I mean, could these DATCOs potentially, if they're forced to sell or buy back shares or what have you, could it spin the opposite direction alongside ETF outflows? Theoretically, I guess that's possible. So yeah, I don't know exactly how these are working, but for the most part, there's a lot of money and there's a lot of people interested in the space.
It's crazy. It's crazy. There's so much to get through. I'm just jumping from topic to topic because the next thing that I want to get your take on is the debasement trade. I mean, I just had a gold expert on the show, and she's still more bullish on gold than she is on Bitcoin. I was fighting her a little bit on that. But generally, these economies are running hot. Inflation is no longer anchored to 2% expectations. We're cutting rates, even though we're above the inflation expectation. Atlanta GDP now says GDP is going to run at 3.9%. That's the largest print that I've seen in a GDP reading for a long, long time. What is your take on the debasement trade? How are you reading these things? And when you see this flock to gold and you generally see like the devaluation of the currency, what are the things that come to your mind as a macro analyst? Generally, how do you process these things? Are you straight up worried, or what's the sentiment like in your world when it comes to the debasement trade?
Yeah, I mean, it's funny. There are some people in this space that like they like don't even like gold. So like I get those people on the whole side of things where they are, trying to look at this and they don't believe in gold as an investment or a portfolio diversifier. So they also don't get Bitcoin. But the people who are really like gold, but think Bitcoin is a complete scam. Like we can throw names out there that like I can't wrap my head around, because you can make the argument that it's a digital version, it's a better version of gold in many regards. So yeah, the way I look at it, I track it. I'm just looking at flows and what's going on. And I mean, gold ETFs are on fire right now. It's funny. A couple of years ago, there was all these stories about central banks buying gold, and the gold price was going down. Outflows were coming out of the gold ETFs, and now all of a sudden, like everyone's pouring in. So if we look at the gold ETF specifically, they've taken in 41.9. They've taken about 42 billion in the US alone. So those numbers are absolutely insane. But if you look at the Bitcoin ETFs, they've taken in 28, 29 billion so far this year, and it's a much smaller market cap. So on a percentage basis, if you're looking at the US market, you're looking at these things. Bitcoin's taken in tons of money on a percentage basis, just not keeping up with gold. And obviously the gold price appreciation, we're seeing Bitcoin go down, more act like a risk asset, and gold really doing its thing. And like, the way the people like to think about, like, it's a safe haven, it's going to go up when the stock market goes down, and that's not really how gold works. I didn't listen to your interview beforehand, but like, gold kind of just beats to its old drum, right? Like it goes in wacky directions. Sometimes it's correlated, sometimes it's like inversely correlated. It's not inversely correlated to equity markets. It has like a 0% correlation to risk assets for the most part, whereas Bitcoin, it has like a 0.2, 0.3 correlation over the last 5 years on a weekly basis to this S&P 500, NASDAQ, highly correlated liquidity, and other risk metrics type things, M2. So, you know, I view them as complementary assets in a portfolio.
Yeah.
I've been writing that since 2018. I've been doing this thing. I call it the store value smackdown, where I can compare and contrast gold and Bitcoin, and like they're supplementary or complementary assets in a portfolio. They're not like competitive. You know, you don't only have to pick one, as far as I'm concerned.
Absolutely. No, I'm on the same page there. Ultimately, these things are both hedges, and they're both driven by narratives. It feels like Bitcoin even more so, but gold is certainly taking that spotlight now too. When there is this currency devaluation and the debasement trade, these things trade like meme stocks. But when the S&P is going down, there's kind of this narrative around safe haven assets and inflation hedges, right? So they can kind of be the best of both worlds, and we've certainly seen Bitcoin act that way. Just compound on this gold topic, there's people out there that are saying historically we've seen the rotation happen. First it goes to gold has this run up, and then historically we see a rotation over to Bitcoin. When you're looking at the ratio between gold and Bitcoin, understandably so, and I agree, these things are complementary in a portfolio. But when you have those guys that kind of go one or the other, where do you see this ratio? Do you see this rotation that might happen? Do you think it could happen? Do you think gold is kind of getting overbought here relative to Bitcoin? How do you see these two playing out when it comes to, which one owns the narrative?
You know, honestly, technically, I'm not really even allowed to answer some of those questions, but I would say, like, if you look over a long enough time frame, I mean, gold, the ratio of Bitcoin to gold bottomed obviously at the end of 2022 and into early 2023. After peaking in 2021, it was actually like ridiculously high. And then we actually broke that peak in December of 2024 following the Trump election. And obviously now it's like literally going straight down. Bitcoin's going down and gold is going up, though today gold's down a little bit. But I mean, if you look at the performance of gold over the last, 6 months, it's kind of insane for an asset that has a market cap over 20 trillion. I mean, the numbers are absolutely ridiculous. It's added multiple Bitcoins in market cap over the last year. This thing ebbs and flows. If you look over a long enough time frame, going back 2015 or even earlier, I mean, the trend is pretty clear in which direction it's going. Bitcoin is becoming digital gold theoretically, but right now Bitcoin is not a digital gold. It's not. I mean, theoretically, I view it as a potential store of value, but it does not trade like a store of value. This thing trades like a risk asset, and you see that over time. But also, people like to act like gold is like doesn't go down or doesn't have these volatile times. It has massive drawdowns. Like if you look at 2011 to 2016, it also has drawdowns. Everything has risk. It's just overplayed, but obviously Bitcoin's is way higher risk. And theoretically, hopefully you hope that you're compensated with higher return, but past returns aren't always indicative of the future, right?
Yes, certainly not. We're gonna see plenty of that play out once these altcoin ETFs go live. We'll see how the long tail reacts to it. I want to get your temperature on the RWA things as well, because we're seeing a lot of pent up demand. from Wall Street coming into the crypto markets, and in particular around the RWA and stable coins, but it's difficult to get exposure to. When you're looking at some of the things that are happening, they're happening on Wall Street, like the private credit market is one sector that we've seen with a lot of tokenization. This is one direction that they're taking. The private credit market, I'm starting to see some cracks in the foundation. Well, what's your read on this, and do you think that there's cause for concern?
I don't know. I mean, some of this stuff looks like there's potential allegations of fraud in what the stuff you're talking about that you're seeing in news stories recently. I won't pretend to be an expert on private credit. What I will say is like all the tokenization of the private funds, private credit, it's like small potatoes. Like the stuff that's happening on the tokenization side of these on the TradFi assets, TradFi funds right now, it's like we're in this such early stages. Like we have a lot of different companies doing these things. The biggest area, obviously, stable coins, but also money market funds. Like those types of things are the things that are actually gaining some traction. But still, in the grand scheme of things, compared to the TradFi world, I mean, they are like it's like a rounding error, right?
Yeah.
So we're super early days, but you have companies like BlackRock, Franklin Templeton, Bitwise, Wisdom Tree, and then obviously some of those private funds that you were just hinting at that are like they're toying around with this, working with like Securitize and Superstate and tokenizing equity. We are in such the early stages, like not even in inning one of like where this stuff is going to go, in my opinion. There's a lot of regulatory questions that still need to be answered. There's a lot of things that need to be figured out before we see what's happening. But even if like all of private credit blows up, I mean, it's such a small part, like the tokenization side, it's like borderline irrelevant. I think it's just like Hamilton Lane and these other companies are like just getting ready to figure out how to do this if this is indeed where things are going in the future. There's pros and cons to doing this. And then, I mean, the crypto world and most of your followers, they tend to focus more on just the pros. There are certainly things on the con side of things that need to be sorted out.
Yeah, I think this is indicative of the buildup of leverage in the system, and that's generally where I'm sort of coming to, is that we kind of saw the cracks in the foundation in the crypto world. We saw this flash crash last weekend. This was big leverage washout. We're seeing some of the cracks in the foundation when it comes to the private credit market, not necessarily tokenization, but just broadly on off chain and on chain. What's your take on the leverage situation in the broad markets, not just in crypto, but broadly? Do you see there's kind of too much buildup here, and we're looking at potentially getting a washout more broadly? What are some of the signs that we can look at and point to as far as when we're getting a little bit overextended?
Yeah, I mean, I won't pretend. I'm not going to pretend to be an expert in this. Obviously, I pay attention to it, but a lot of the people that are really concerned about this and ringing alarm bells around it, they'll show you charts and they don't put a denominator on it. So they'll look at debt and then they're like, they don't include like what the level of equity is or correct it for assets. Like they look at money market funds, but they don't say it compared to like mutual fund assets as a whole or M2 or the equity market. Like if you put a denominator on a lot of this stuff, yes, we are elevated in some regards to history, but like we're nowhere near like the sort of levels where we're typically see like credit card debt. Put the credit card debt over the balances. Yes, there is some delinquencies and things like that, and there are some cracks forming, but like there's nowhere there's not a lot that I see where I get like super concerned. The one thing that you hear a lot of people point to is what you kind of talked about is private credit. People, there's not a lot of insight into what's happening. And I won't pretend to be an expert on that side of things, but I would say like anybody showing a chart and it's just like debt levels or some sort of things, if there's no denominator on that, I'd be very skeptical of whatever you're looking at. So if there's no like quantifying it over time, like obviously if you're saying like, if you're looking at the equity markets, like it's gone up a ton over the last 10 years. So if debt has gone up over a ton and you're not like accounting for the fact that assets and equity have appreciated as well, you're kind of missing half the picture. That's not to say that we couldn't be running into trouble in certain areas of the market. I mean, the economy and particularly consumers, we see that like there's this K-shaped economy where people at the top are doing very well and people at the bottom are having trouble here. A lot of the stock market is like kind of, in my view, like getting a little disjointed from the economy in a way because so much of it is heavily allocated towards the top end. So like, yeah, I mean, the top 1% is like top 10% of the US economy is accounting for the vast majority of the spend.
Yeah, we're seeing that with Mag 7 taking over more and more of the stock. Everything's just becoming more and more concentrated at the top. I want to get in at maybe just a couple more questions. One is that I saw you retweeted something from CJ, the Limitless guy, about kind of the whistleblower effect that he's had on Binance. What's your take on like centralized finance versus decentralized finance? Kind of the TradFi DeFi conversation is becoming a little bit irrelevant these days because it's all just merging into finance as these things come on chain. But when you look at some of the incumbents, the large incumbents like Binance in this industry, and then you look at some of the on-chain players, Coinbase taking their path with Base and really just opening up permissionless listings. Where do you think is the right, where do you draw the line in the sand with regards to the regulatory environment now? Who do you think is doing it the right way? And what do you have to say to those who are maybe doing it the wrong way?
I'll say a few things on this, right? So my first thing is like when I talk to people in the TradFi world, they kind of outright dismiss everything happened in the DeFi world. They just think it's stupid, and not everyone, but there are a lot of people that just haven't taken a second look. And it's like, no, wait, there actually is a lot of stuff here that's very cool and could be very beneficial to TradFi. But at the same time, DeFi and crypto keeps making mistakes that TradFi made like years and years ago. There's a lot of rules and regulations and things that are set up so that there is no fraud. Like the custodian can't be the exchange. All these different things, like things are segregated. FTX wouldn't have been able to happen in the TradFi world, right? Like there are all these things that are set up with some of the liquidations that happened over this weekend. There are stop limits, there are circuit breakers and things in TradFi so that like things just don't compound and like completely blow up in the same way. Maybe some people would say that they prefer it to blow up the way that it has and be more free, but there are all these things that are set up in our system for leveraging and deleveraging and capital margin calls and capital calls and all these things that like TradFi has learned from over the last 100+ years, right? And I feel like there's this continuing thing that happens where like DeFi does something and then they're like, oh wait, we should have been doing this, and it's like, well, TradFi has been doing this for forever. So there's like this learning that's going on both sides, and like you said, everything's kind of merging together, and I think it's going to learn from each other, but it's going to take a long time. It's going to be many years. So I kind of sit in the middle here where I'm trying to like I talk to the DeFi people and I'm like, look, TradFi, there's reasons that TradFi does it this way. It's not always just that tech is going to solve these problems. And then I go into the TradFi world where I normally really come from, and like they just think it's all scams and NFTs and things that no one really cares about, and trading and frauds. And it's just like, that is not all that's happening here. There's a lot of people with a lot of money building really cool, powerful things. And really, like almost anything, it's the truth tends to be more in the middle.
Asset management redefined, built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management. Blockchain shortcuts, templates, and widgets. Launch without friction. For builders, by builders. Visit enso.build.
Where do you see the most opportunity for regulation, improvement, and generally just bringing the infrastructure that has worked for so long in TradFi and bringing it to DeFi? It feels like we're 90% of the way there, and maybe even more. What is still the missing piece for us to like turn this into a real legitimate industry? Saw a conversation. Do you think crypto should have circuit breakers? Some of the things that are just so fundamental to the financial world. What do you think are those missing pieces that are still instrumental that we should be adding to crypto?
Yeah, I mean, the main thing I think that like people need to be concerned about in this industry, as far as I'm concerned, is like the Clarity Act in Congress, what's going on, right? So like whatever's going on with Congress and that front, like providing more clarity to what's allowed and what isn't allowed in crypto, and creating rules of the road so that like so we get a new administration 3+ years from now and they're Democrat, like are they going to go in and kill stuff because this administration never got some rules through? That's the number one thing that I think people should be concerned about, as far as I'm concerned. I'm not going to pretend to know like how crypto should build in circuit breakers, but it's pretty evident that whatever happened this weekend has to do with some of the microstructure of the way that deleveraging happens and perps. There's pros and cons to all these things, and you just learn from. I mean, TradFi has flash crashes too. They had massive flash crashes years ago, and they've come up with solutions that solve this. Part of the problem is DeFi is very decentralized, but if you look at some of the DeFi protocols, they didn't, have nearly as many problems as something like Binance, some of these more centralized books. But there are other issues where things are hard coded that DeFi could potentially have an issue too. So it's hard to know exactly what the solution is. I think it's going to be iteration. But I mean, the one thing that the industry really needs from the US perspective is some more clarity. We got it in the Genius bill for what stable coins are allowed, and they're going to need more stuff for like what's allowed in DeFi. And there's been, I mean, there was a huge push last week complaining from people that, you know, some of the Democratic people that have been elected that were seemingly pro crypto are trying to put things into this bill that would make crypto borderline illegal. So yeah, I mean, there needs to be some, you know, sorting out with what's actually allowed and what people are actually able to build and what's required to be collected and things along those lines.
Yep. Man, just to bring us full circle here, right now, Kalshi's prediction market of how long will the government shutdown last has us at between 35 and 40 days, which makes it the longest government shutdown ever. You know, people care about this because of ETFs mostly in this world, but generally on a scale of 1 to 10, 10 being the most, how much should we care about the government shutdown? Everything's kind of working as normal. Where do you put this on the sliding scale?
Yeah, I mean, it matters. I mean, for anyone who's not collecting a paycheck right now, it matters a lot for them, right? But the other, from like taking a step back from that, obviously, from financial markets, obviously, it's kind of not. People don't seem to care all that much. But from like my particular area, what I'm watching is that a lot of these filings, there's been 3x and 5x filings, which I'm not sure the SEC will allow. Tons of these crypto filings. Things are on ice until the SEC is back working again, I'm pretty sure. So I won't pretend to know exactly what's going to happen, but if you care about crypto and you're trying to figure out what's going on with these, you know, digital assets, ETFs, you kind of need the government to come back in order for any of these things to actually list. And I think, I mean, ultimately, even if it is 30, 40 days, I mean, our expectation is we're going to see a ton of new assets come to market before the end of the year. But I mean, if this goes on through the end of the year, which would be completely unprecedented, then I guess maybe we won't see these assets. So yeah, that's what we're paying attention to, but it's pretty much a foregone conclusion that we're going to get at least 9 new assets that come to market. And I'll read those off if you want.
Sure, please.
Yeah. So Solana, Litecoin, Dogecoin, Polkadot, Avalanche, Chainlink, Hedera, Cardano, and XRP. And then also you have Stellar and, you know, Bitcoin Cash and Shiba Inu that technically would also probably qualify if somebody wanted to file for them. So
Got it.
all of those things theoretically within the next 6 to 12 months should or could have a spot ETF tracking them. And even without the current regulations, Rec Shares and others have figured out ways to launch products that don't necessarily comply with the rules that are required under the new generic listing standards, but they can launch ETFs too. So you're going to see 100+ products come to market in the next few months.
Cambrian explosion out there in the public markets. How close were we to approving these things before the government went on vacation? Like, you know, if we come back, say next week, do we expect these things to be in review for another 2 weeks, another 2 months before they ultimately do go live?
I really don't know. Probably less. I mean, it seemed like things were gearing up to let Solana launch, most likely. So I think there was going to be a bunch of Solana ETFs that come to market. They are allowing staking now. So there are a bunch of Ethereum ETFs that were spot only and couldn't stake that are now staking.
Right.
So I think Solana would have been next, but I think a lot of the other ones, Litecoin was probably about to come to market. I think there was a whole bunch of products that were about to come to market and could come to market very quickly once the SEC comes back. But I don't know exactly how this is going to work. Like the way these generic listing standards rules work is you file a prospectus and then the SEC has 75 days to give you comments on what you need to update, what you need to change, or basically tell you can't launch this. Right. These products were filed in many cases like well before the 75-day rule, but the generic listing standards weren't approved till mid to late September 17th, I think. So like there's this weird like middle ground where like in the future it's going to be file prospectus and you have 75 days and theoretically you can launch, which is how most ETFs work. And now these commodity-based trust shares are also going to work. We're kind of in this middle zone where like they just instituted the generic listing standards. They need to figure out exactly how this is going to work. And I'm not going to pretend to know, but I think you're going to see a lot of things come to market before the end of the year. Yeah,
makes a ton of sense. Man, James, thanks so much for joining. It was an absolute pleasure. The insights that we got on the ETFs, I think are gonna help a lot of people. The 75 days that you mentioned from September, puts us towards the end of the year. Some of the things are more likely, like you said, 3x, 5x. There's some of these things that might take a little bit more time, or might be denied altogether. But real, just clarity in the way in which you're describing these things is really helpful for us to pick through and pick out the most important things that are happening in the market today. So Absolute pleasure. Thank you so much for coming on, man. And more margaritas very soon.
Yeah, thanks for having me. Hope you have a good rest of your day. Happy Friday.
Happy
Hopefully,
Friday.
hopefully tonight and this weekend will go better for the markets than last weekend and last Friday.
Exactly. So far, we are one weekend without market turmoil flash crash. So let's see if we can get that to 2 or 3. All right, James. Thanks, man.
See ya.
Let's keep things rolling here. That was an absolutely just a great segment with James, Bloomberg analyst. Man, he's got the insights. You know, when it comes to the ETFs and it comes to all the things that we're keeping track of on a daily basis, he's got the answers. He's got the info. Man, we're just getting comments out here. Best crypto show out there. You guys make this the best crypto show out there. We're going to continue we're just picking lemons. We're going to just keep squeezing these lemons so that you guys can make lemonade. Guys, it's been a doozy. I think we were at something like 3.5 hours here today, just one after another. We talked about prediction markets. We talked about AI agents. We talked about macro. We talked about gold, the debasement trade, currency devaluation. Man, what a great segment. James was an animal. He's bringing the alpha on the ETFs. I mean, government shutdown, is it affecting our daily lives? I don't know. The sun is still shining. Everything is still going to be okay. But man, we want, if you look at the markets today, we want these ETFs, especially if you look at what happened in the markets last time we saw these ETFs go live. We don't want Downtober. We want Uptober. Man, it's very, very tricky times. Something that flew under the radar, I think we got a little bit of perspective on it, is this Huobi Dat. Lee Lin to launch $1 billion Ether trust. And normally I come from the era of crypto, 2019, 2020. These guys tend to, there's an old saying, it's pack your bags before you announce. But that's not the case anymore. These guys are calling their shot and then they're doing it. And so, if he's going out and he's raising $1 billion for an Ether trust, that is $1 billion that is currently sidelined in dry powder. Guys, doozy of a day. We're gonna call it a day, a week. Check out these segments. We're gonna be posting on YouTube over the weekend. Smash the follow button, smash the subscribe, give us a retweet, give us a like. We're gonna have clips rolling over the next 72 hours. And then we're gonna do it all next week. We're going to do it all again. Bullish, roll up TV, market bounce. Let's get a weekend pump for the boys. Let's go. Stay frosty, guys. We're going to see you next time. Shout out to everyone behind the scenes. Marcelo, Leo, Alex, Andy's out there somewhere. Aliona, Nero. Come on, guys. Give it up for the team behind the scenes. Couldn't do it without you guys. Couldn't do it with everyone who's watching. Hope you guys learned something. Hope you guys took something away, maybe even placed a trade while we were here live, or just generally upgraded your knowledge base and have a better understanding of what is happening out there in the markets and on chain. Whew. What a week. All right, that's it. We're done. Have a great weekend, guys. Signing off. Roll Up TV. Peace.